Good day, everyone. Well, history has shown that since 1750, about 80% of all currencies have disappeared, and the other 20% have all been severely devalued. And it's the way of fractional banking, which is why inflation megatrend will never end. The market timing designed to catch the bulk of the uptrends and downtrends is done by careful analysis of critical variables, which correlate with general market direction. Bitcoin is particularly sensitive to these variables, which explains how calling major tops and bottoms in Bitcoin to within a few weeks has been achieved for many years, and stocks too have become increasingly correlated with such variables. Global liquidity is key, which is being boosted by Powell, who is ending QT, quantitative tightening, along with rates being lowered. Powell has stated that our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. He's also said that liquidity conditions are gradually tightening, and he wants to avoid the kind of money market strains that were experienced in September 2019 during the repo crisis. In addition, China has injected roughly $1 trillion into its markets over the last year. China fears that stablecoins could enable capital flight and weaken state control. Indeed, China's wealthy have moved well over the $50,000 limit allowed through such vehicles. The People's Bank of China is thus easing policy and devaluing the yuan against real assets like gold rather than the dollar, aligning with a long-term monetary retrenchment. Now, there's a book called A History of Interest Rates, and it's noted that in over 4,000 years of recorded history, zero or negative rates never appeared until the 2010s, and that was during the post-Great Financial Crisis and the COVID era. Recent monetary policy has been unprecedented, which shows that governments have moved from rate cuts to permanent monetization as a default response to crises. Today's environment, that is the willingness for zero, near zero, or negative interest rates, permanent monetization, global capital wars, and the simultaneous rise of gold, stocks, and crypto is unprecedented in 4,000 years of monetary history. It's a new age of monetary debasement requiring hedging through hard assets like gold, stocks, Bitcoin, real estate, and other scarcity-based stores of value. If economies slow significantly despite AI spurring stagflation, policymakers could delay the liquidity contraction via rate cuts and QE, keeping liquidity elevated for longer and pushing asset market tops further into the future. However, inflation issues may ultimately limit this extension. That said, a new acceptable level of inflation seems to be above 2%. So not only does the inflation data get manipulated, but the Fed also adjusts its mandate to changing times. Now, both gold and silver sold off sharply. One could say it's primarily due to profit taking, also a stronger US dollar, easing trade tensions, and technical overbought conditions followed by record rallies. In the week ending October 10th, gold and silver funds posted $8.2 billion in net inflows, which is the second largest inflow on record, and that was followed by a record $9.5 billion seen in the prior week. Silver has made a double top, all that said. So if we look back to 2011, which was the last time it had a major climax run, you can see that it's now fallen below the prior top achieved in 2011. And one should monitor price volume action to see if silver will stabilize from here. If it has a steep correction, as it did in 2011, when it fell from just over $50 to below 32 in 2 short weeks on record volume, that could very well signal the end of the run in precious metals. But despite the sharp short-term drop that we're seeing right now, longer term, gold and silver fundamentals remain supportive due to ongoing geopolitical risks, central bank demand for gold, debasement of fiat and expectations of future rate cuts. Institutional capital continues to pile into gold while the flow of global liquidity remains robust. Central bank buying will also extend to Bitcoin as the fight to preserve purchasing power intensifies. Indeed, global M2 money supply is just about to hit $140 trillion for the first time in history. Gil, how are you seeing everything in this, weakened state of the markets?
Well, I think the precious metal space was a sell on Friday. You could see that. And it was, I mean, I was even talking about how you're heading into earnings and these stocks likely after big runs will have to base. I thought gold would hit a peak of $4,000 and then back off and then go into some kind of a range between 35 and 4,000. I was wrong on that. And I remember two Sundays ago, I bought one single gold eagle coin just to stop it at 4,013, thinking that would do it. And of course, it goes up towards, I think we got to 43.98 at the peak. And at that point, and I've been kind of surprised by the move because usually what happens, there's an old, as the commodity traders say, the 2% rule, which is the U.S. government won't, or the powers that be, the LBMA, whoever it is, won't let gold rally more than 2% in one day. If it does, they come in and stop it. You've regularly seen that happen because you'll get these spikes, upside spikes in gold and silver too, and then the next day, wham, they get slammed because they have to be contained. So I was surprised to see it go as far as it has. But I think the market's going into correction mode, and I think the whole AI thing is being exposed for what it is, one big daisy chain of AI companies doing business mostly with each other and no real benefits trickling down yet to a more practical level where value is created and profits are made. Right now, everybody's been spending money. They've been doing it in a big daisy chain. I've got a chart here. In fact, I've been talking about this for the last few weeks, maybe longer, I don't know. But now today, the Wall Street Journal has an article. They have this wonderful chart where you can see what's going on between OpenAI, Microsoft, NVIDIA, CoreWeave, AMD, Oracle. There are other companies involved. But as we know, for example, NVIDIA invests $100 billion in OpenAI, and then OpenAI uses that to buy NVIDIA chips. OpenAI placed an order for $300 billion of computing power from Oracle over 5 years. That's part of the $500 billion that Oracle has been touting as all these revenues coming in. But, it's quite incestuous. And Oracle turns around and buys the chips from NVIDIA, which in turn can buy things from CoreWeave, and Microsoft's in there as well. So it's quite incestuous, okay? And it's a bubble. And the bubble, if AI is going to become useful, as with the internet, the bubble's going to have to be popped and then let everything sift out and separate the wheat from the chaff. But that's what it looks like to me. So I've been waiting for this here. You got a double top in the S&P. The same thing in the NASDAQ, so we're rolling back over. They did not go past the prior highs, though. They ran into resistance there. So for my money, that is an area where I probably want to be going short the market via my little friends. So I've also been working some selected tech shorts, and I'll look at those in a second. No, give me 1 second, please. Got to check something. Hang on. Okay, so here we have the FAS. You have this is one area to watch because you've got, we know Zions Bancorp and Western Alliance Bancorp last week reported huge credit delinquency. So the economy is slowing, okay? The GDP numbers are fluffed up, and you have to look at what's going on in the economy. Also, if you look around where I live in the U.S., in L.A., you're seeing deteriorating signs or signs of deterioration. I've talked about this before over the past 3 months. I'm noticing restaurants closing. I went to the post office the other day. There used to be 5 eateries right next to it. 4 of them are gone. They're empty, and there's nothing taking their place. My favorite restaurant in Marina del Rey, Chris, you know this because we had our conference, and we used to go there all the time, Cafe del Rey, they had to shut down. And what's interesting is, okay, that was due to COVID, but ever since they shut down about 2 years ago, I think it was, Nobody's taking that spot, and that spot is prime real estate right on the marina in Marina del Rey. And so you're seeing it, okay? So it's pretty obvious it's happening, and it's pretty obvious that employment is slowing, and it's pretty obvious the Fed has no clue. So they'll be scrambling to cut rates and pump up the QE machines again. But I think the financial space has some issues here, and those are going to get called out. Some of them were last week, and I think there's more coming. So the FAS here, you get a long entry this morning right at the open. So if we look at the SQQQ, very simple stuff. You know, you get a long entry right near the open, and it's still pushing higher. I don't know why this chart defaults to this. If anybody knows what the deal is here, let me know. But it keeps wanting to compress and get a lot longer. But anyways, you can see this one's working. Also, I think this is a good thing to look at here, the SOX-S, because a lot of the AI hype is all these chip companies. Texas Instruments getting whacked today. So they're all working, and that's the way I'll play this. So if we look at NVIDIA, so one of my shorts, short target. It's been a short target since it failed up here. And hanging along, it's pretty textbook. It breaks the 10 and the 20, so the failure is on, the breakout fails. Then you bounce between the 50 and then the zone where the 10 and the 20 come together to form like a resistance zone. And then bonk, it's now breaking the 50-day line. So we'll see how that plays out. Oracle's has been another good one, and it's been back and forth for a while. It looked like it was trying to set up here, but this is another smoke and mirror situation. Like I just showed you, 300 billion of their 500 billion in future orders that they're touting is coming from OpenAI. You know, and they're making it sound like, oh, AI orders are coming from all over, mom and pop and Uncle Joe and everybody's brother and sister are ordering it, and everybody wants it. No, it's a few components, a few spokes in that daisy chain I just showed you. So this is coming apart. So you had the failure here. And remember last week I told you on this move here that someone had come out and said that they were having their profit margins on their AI product was going to be about 14%, which is way below their typical profit margins of 30% or more. And then they came out and said, well, our gross profit margin will be better than 30%. Of course, they stuck that word gross in there, and I noted it. Go back and look at last week's video. And then, you know, but the market figured that out pretty quickly, and boom, the next day it gets slammed through the 10 and the 20-day line right here. That was 4 days ago. That was a short entry. Now you're busting the 50. That was a short entry this morning. May still be in short position, but it's a little extended on the downside. TSM, my latest victim, I shorted it here above the 300 level. That would have been on Monday. And a reverse at the 300 level. It has not pushed back above that. And I won't, by the way, I won't hold this overnight. I'll come back in. So I shorted here, it comes in, cover. The next day it pushes back up to 299 and change, shorted again. It breaks, cover. Yesterday it rallies back above the 10-day line and it reverses short and then cover. And then this morning you're back into the 10-day line, shorted again. So that's basically how I will campaign stocks. Now, the easy way to take away the individual stock risk, because you never know when there's going to be some stupid news that's going to cause something to rally 20 points, because that's been another characteristic of this market. You get news comes out on something like IonQ announced that, oh, we've come up with a better technology for quantum computing, blah, blah, blah. And you get this move here, which occurred 8 days ago. That looked like a big, beautiful pocket pivot. It was not. It was essentially a little mini double top, and it failed immediately. And so now it breaks here at the 20-day line. That was last Thursday. That triggered a short entry there. And now it's busting the 50-day line. There you go. But see, you get this huge move. On news, it's like, okay, so what? How are you turning that into profits? Well, guess what? They don't make profits. So none of these companies do. I mean, I've liked some of the technology here, and I think these were hot while they were hot, and now they're not. And you see Rigetti also breaking out. The one that we really loved, probably one of our best stocks that we put reports out on. As I said, I've been saying, once it breaks the 10-day line, you use that as your selling guide. That's it, because it's going vertical. And there it goes. You know, through the 10-day line, now busting the 20. And if you look around, you see a lot of this. Everything's breaking down. There is no safe place to hide right now. And the market's coming off, and so everything's working on the short side. Precious metals got creamed, but, you know, I was thinking gold I had to revise my target once I got through 4,000, and I couldn't kill it by buying a single gold eagle coin, which I have to say I don't really like the gold eagles that much. Anyways, but that's another issue. I'll cover that at a different time. You see the GLD coming into the 20-day line. We'll see if it holds. This will be interesting. But, you know, my take is you might see gold and silver hang in there somehow. Silver is not. To me, once it broke when spot silver busted 50, that's it. I'm gone. No argument there. So, and I don't know whether it goes higher or not. Although you can find a million guys on YouTube who will tell you it's going to 150 or something, or, you know, just like Bitcoin. But I'm not a hypester. I'm not a perma-bull. I play the trends. And for all I know, we're looking at a good downtrend to be short silver here at the 20-day line, you know, barring any more physical shortages. But that all got sorted out. And I think that was part of the reason why you saw it break yesterday along with gold. I also think probably the U.S. government is in there shorting it. And then there's also what I consider to be forced selling overcoming the market, which is that you have these liquidity issues. And I think that's going to be a problem. Let's look and see what the, Bank of America coming out. I thought JP Morgan yesterday looked like a short. Yeah, it was at the 50-day line, and it's moving lower. Wells Fargo, double top right there. You see how that, you get a double top. So you get a first at this one, and it breaks and bounces off the 20-day line. So here's your whip. Let's get this up. Here's your left side peak. Here on this side, I don't know why this pen doesn't want to come up. Let's see if I try starting it up again. Nope, doesn't want to work. Anyways, you get the idea here. I'll circle the left side peak. So you had one reversal, two reversals. Now it's heading back to the 20-day line. That's a short. The KRE, the regional banks, because we know that Wall and Zion, right? We have Wall and Zion. You're getting I don't know, these reflex rallies. I don't know what that's all about, but that just brings them into short sale range. Probably the easier way to do it is to just come after the KRE is one way to do it. I think there is an inverse ETF for regional banks, but it's fairly illiquid. If anybody knows what that is, shoot me a question over here. Let's see. No questions yet. What else? I think if we go over here, we'll look at some of the big stock NASDAQ names. So you see Apple, that may be double topping. It's trying to break out and it fails. That's pretty classic stuff. Amazon, you had a rally, now it's gap below the 20. Booking, maybe a short at the 20. Alphabet hanging out. Let's see what else. Intel breaking the 10. I don't really understand the impetus for this. They report earnings tomorrow, so I guess we'll find out how great business is now that the U.S. government dumped $10 billion and NVIDIA dumped $5 billion into the company. I don't think it changes any of the issues that they have, but whatever. There's Meta. They came out and announced that they're cutting jobs, AI jobs. And of course, you know, there's a precedent for this, and that is the metaverse. That's why they changed their name to Meta Platforms from Facebook, because the metaverse was going to be this great thing, remember? We're all going to buy real estate in the metaverse and live our lives in the metaverse. I mean, what an absurd concept, okay? And these guys obviously thought it was going to be great because they changed their name to Meta Platforms. They never changed it to AI Platforms, which maybe reflects some measure of good sense, but I don't know. But I'm watching to see if this busts a 20-day line. I think that's what's causing a lot of these. Well, in fact, everything on my AI-related semiconductor list is down. But anyways, you can see Microsoft. I don't know why that's rallying. Netflix blown apart after earnings. What did you expect? NVIDIA, again, looking like a short Oracle. Tesla. Coming into the 20-day line, they have earnings after the close. But if we look at the big stock semiconductors, they're all starting to come off today. So this is one of the few days where I've seen so many of them down. Arista's not a big stock semiconductor, but it's a big stock AI tech. Hovering along support. You see ARM breaking down, ASML breaking down, and just getting started. So that's why I think watching the SOXS, the SOXS Direxion Daily Semiconductor Bear 3X ETF, it might be a reasonable vehicle for playing these on the downside. And you can trade it. The other good thing about it, at least in my brokerages that I use, is that I can trade it 24 hours a day. But but 5 days a week, and that helps with overnight risk. Marvell, look at that's triggering a short. Well, it triggered a short at the 20-day line yesterday. And so you get the idea what's going on here. I mean, you know, you don't need a weatherman to tell you which way the weather is blowing. Looking at some other stuff. I think, as I was writing over the weekend, I think Bitcoin is like a model stock for the short side. I mean, you got one double top here, right, through this left side peak, and it broke down. Looked like it was death warmed over, and then it finally got down in here, and it rallied, and then it came down again. Now it really looked like death warmed over, but suddenly found its feet and streaked higher, and then reversed at this peak here. Over here is when it happened, what, about 3 weeks ago, and you've been busting the 50, then a short on the bounce, busted the 20, then a short yesterday at the 50, and now trying to hang on to 200-day moving average resistance. So something's wrong here. But like I've been saying, I think the whole problem with Bitcoin is that the government's involved, and I think that kills it. Sorry, but that's my thought. And if you look at the weekly chart, you're starting to see some long weekly bars over the past couple of weeks on the downside as it's breaking 10-week moving average support. So this doesn't look good. So I don't know, kind of a shame. You know, I see these guys on TV, these Bitcoin promoters talking about, oh, we have the crypto president now, the Bitcoin president. Well, doesn't seem to be helping. So, you know, sorry. Anyways, what else? That's really all I'm looking at. So, you know, we'll see how we work this shorting SKRE inverse 2 times. Okay, thanks for that, Pascal. SKRE. Yeah, that might be useful. But, you know, I think you can, you got to work this market, I think. If it's starting to top, I don't think it's going to go all at once. And today's a decent day on the short side, and there have been a couple others over the past week or so. And we'll just see how this all plays out. But it's touch and go. But I don't think there's any reason to be long anything. And I certainly don't want to be long. You know, I got out of these things last Friday for the most part. And they had one little bounce on Monday. And that was it. So if you were still long, I think that was probably your last chance to short. You look at some of these. I mean, that's Equinox is a high quality junior miner about to become a big stock miner. Second largest in gold miner in Canada. Barrick now coming down to the 50-day line. Maybe that's viable. So, but no institutions seem to be interested in it right now. I tried buying it. It doesn't feel like it has any lift. Newmont's a little different, but they have earnings tomorrow, and I'm not really going to mess around with that. If you look at some of the South African miners, you know, that's shaking out at the 20-day, 50-day line, along with Anglo Gold Ashanti. So, I mean, you could test these as moving average undercut and rally moves, but, you know, it's touch and go, like I said. Somebody asked me this morning, you know, is this a textbook moving average undercut and rally? Well, a moving average undercut and rally, there's no real, you know, differentiating between textbook and non-textbook. It's a pretty simple setup. You know, what I find interesting is that the simpler you make things or try to make things, people invariably want to complicate them. You know, like in your experience, do you use the 15-minute chart with the blah, 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 and blah, 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 this at the 50-day line, and blah, blah, blah. And it's like, what? Now I look at this and it's like, okay, I can buy it. It's above the 50-day line. If it breaks the 50-day line, I'm going to sell it. Is it that difficult? And that's really all it is. You know, the other thing is you're kind of using your instinct in terms of what's the flow of the market? What's the flow of the space? And I think when you're thinking about this, because I know a lot of people have been hot for this area now, but the breakout occurred back in March, I think it was, in stuff like Anglo Gold. And now you've come up all this way. If you look at Newmont, for example, this is interesting because it basically came within a breadth of the $100 century mark for the first time in its history. And so, you know, I think at best this area needs to base, and I think gold and silver need to base. So, you know, cool your heels if you're thinking you're going to buy the first pullback. Not only that, you know, I probably helped top the market by buying one single gold eagle, and I'll buy more if I have to, damn it. Anyways, that's all I got. You got anything else, Chris?
We are good over here.
Okie dokie. All right, everyone. Thanks for showing up as always. Caution is advised. So review your risk management plans, review your selling guides. Like example, if you're long iron, I kept saying my stop is the 10-day line. It broke the 10-day line. Hasta la vista, baby. Maybe we'll be back. Anyways, we'll see. I mean, they might set up again. Anyways, that's it for now, everyone. We'll catch you next week. Take care.
So long, everyone.